Hey guys, James here. In this complete candlestick charts guide, we're going to look at the anatomy of the candlestick and why traders use this more than any other type of chart. We'll learn why the candlestick has a body and then these other two lines poking out from the top and the bottom, and then actually how to use candlesticks to improve our trading and analysis of the market. Timestamps are in the description for you alongside some other helpful videos and resources. Let's come firstly to why we actually use candlesticks as traders and what information they actually give us. We can come to a simple chart right here. This is actually Bitcoin against US dollar. We can see the price on the right hand side, but as a trader, I can actually see a lot more than that. I can see the supply and demand and the battle between buyers and sellers for every given time period. So what do we actually need to look for when we're traders? We need data. We need time and price details. We need to know what people were trading, what price they were trading at, and also the battle between buyers and sellers. And that gives us a lot of information as traders. Traders use candlestick charts to anticipate the future of a market, because if you know the supply and demand right now and actually how that supply and demand is changing, then we can potentially anticipate future moves. And that is obviously what we're doing every time that we're trading. Candlestick charts also show the market high and low for a given time period. Most professionals will use candlesticks as opposed to some other charting methods, although there are some other methods that we can use, but candlesticks are by far the most popular and show us a lot of trading info for each time period. And time period's really important, so we're going to come on to that now. Candlestick timescales. Each candle is actually a period in time, so we can look at the chart right here. You can see this time period right here. Every single candlestick represents some amount of time, and actually you can change this. It isn't fixed. At the moment, you can see I'm on a 1-day chart. What that means is that each candlestick represents 1 day, 24 hours of trading. If you're trading stocks, then that may actually be 8 hours of trading or however long the stock market is open for. This one, 24 hours, this one, 24 hours. You can change that though very easily. You can come up to the 4-hour chart. Now what we're seeing is every single candlestick being 4 hours in length. You can see that the exact same chart has completely and utterly changed. Each candlestick is now only 4 hours. So of course we have multiple candlesticks for each day. This right here will be a 4-hour time period, again 4 hours, and the next 4 hours. Depending on whether you're a day trader, a scalper, or a longer term trader, this will be a big difference. Maybe Bitcoin can move 5 or 6% in a day. But within that day, it may actually move up 5%, down 5%, up 5%, down 5%, and it can move up and down at various intervals throughout that day. So it really does depend on what timescale that you're trading on, and there will be many opportunities at different timescales. Shorter time periods are definitely better for day traders because day traders can see even minute by minute updates in candlesticks, and this will really show the battle between traders. If you're a longer term trader, then those intraday price movements aren't going to matter to you, and you can either have a 1-day or even a 1-week chart. And so this really does smooth out a lot of the intraday and other price movements and just gives you a weekly update really on what is happening during each week. Most traders, especially day traders, may actually go on the 4-hour, 8-hour, scalpers down to the 15-minute, 5-minute. If you're just putting in a trade, a lot of people will start at the 1-day just to see what is happening each day on the week that you're trading. So now that we know that we can choose the time scale of the candlestick and it will definitely impact our trading, we can go on how actually candlesticks are put together. There's only a few terms that you have to know with candlesticks: the open, the close, the high, and the low. We'll go through exactly how these are put together. But you can see there's this bit in the middle that's called a body, and then you have these lines that come from the body, and they're sometimes called the shadow or sometimes called the wick of the candle. You'll also see that candlesticks have two colors usually, green and red. These represent up candles and down candles. Of course, the price during a period can move either up or down, so green for up during that period and red for down during that period. So even though these candles look exactly the same, they are different. You can see that the open on this green candle was down here at the bottom, and then the closing price was up at the top. Because the closing price is above the opening price, of course, that is a move to the upside, and so will be represented with green. Exactly the opposite for the downside, where the close is below the open, and of course a red candle for a down move during that period. Just to show you exactly how candlestick charts are made on the chart, we have a very simple chart here that I made. So you have time at the bottom. So this is a 1 hour chart, as you can see, 11 a.m., 12 p.m., 1 and 2 p.m. And then we just have very simple price movements on the right hand side. So at 12 o'clock exactly, a line is made. This is the opening price. It's the opening price of that time period. We are on a 1 hour time period. So we mark it with this line, and the opening price was $99. This is the opening price for the time period. Next though, during this 1 hour, the price actually moves down a little bit and it goes to $98. So we represent that with a line because we are tracking the price. Wherever the price moves, we draw this line, and it went down to 98. This is then the low of the session, which is this 1 hour period. We have to mark that because we need to know that price data. However, during this 1 hour, the price does also go up. Of course, an hour is a long amount of time and the price can go down and up in that. So actually it went all the way up right here. And this is the high of the session, the 1 hour period that we're looking at. This is about 102.5. So now we have 3 data points. We have the opening price, the low price, and the high price in the session. This is actually the closing price right here. So at 12:59 and 59 seconds, the session has to close because the next session, the 1 o'clock session, is going to open. And so we have to mark the closing price right here. And you can see that the closing price is 102. So we have an open at 99, a close at 102. Is this an up or down candle? Of course, it's an up candle. And so we just color it in and make it green. But we only color in the difference between the open and the close. Highs and lows in the session are still represented by the wick of the candle, sometimes known as the shadow. Let's move on to the next session then, because the next session has started at 1 o'clock exactly. We have the opening price of that session right here. It is 102. Then of course, we have to have the highs and lows. During the session, the price went all the way up to about 104. So we represent that with a line up to that price. During the session, it also went down to around 98.5. So we have to represent that with the line as well, so we know where the price is. This is the low. This is the close of the session at 1:59 and 59 seconds. Just under $100. So the open here and the close right here, the close is below the open. So of course this is a down move. We just color it in red, and there you can see exactly how candlestick charts are made, and this just goes on and on forever as long as there is price data. What we're going to come on to now though is candlestick patterns, because having that price data is great. I now know that during this session the price went up, and I know at this session the price went down, and I can see that actually the amount of the move was very big with this session compared to other sessions. But how do we actually go ahead and read that and try and make some knowledge out of this for trading the market? Well, a lot of people look at candlestick patterns, and there are many patterns that tell us various different things, of course, because we now know a lot of trading information. So we're going to start with bullish candlestick patterns, and a hammer pattern is one example of this. So this is a bullish pattern, and as you can see, sellers drove the price lower during the day or during the session. You can see it right here. So as we know, we do have the open right here. We also have the close right here. Close is above the open, so it is green. That doesn't tell us the whole story. You can see this huge wick or this huge shadow down here. What is that actually telling us? It's telling us that intra-time period, sellers actually came in and drove the price significantly lower. Sellers came in, they dumped on the market, and the price came down. But what this candle is telling us is that those sellers didn't win during the period. In fact, buyers pushed it all the way from this low price all the way up and actually pushed it above the entry point for that session. What that means is that essentially during the latter half of this session, or the latter period of this session, buyers won big time. And what we can do as traders is anticipate what that means for the spillover of trade into the next session. Let's try and find a hammer pattern on the chart then, and we can go and see it right here. Just straight up, you can see this hammer, exactly what we saw during this session. During this session previously, you can see a down move right here, so a bearish move, and that carried over into this session. The selling continued during the time period, and the price was pushed down all the way to this level. But before this time period closed, buyers came in and pushed the price all the way up, and it actually finished above the open price for the session. As a trader, I could suggest that possibly this will continue into other sessions. those buyers may still be around, and that means they could potentially keep buying into sessions into the future. You can see in the next session, it happened again. It was a slight up move, and those buyers continued coming into the market. And as a trader, if you took a little bit of risk and thought that those buyers would continue, that would have been a profitable trade. This doesn't happen every time though, of course, otherwise everyone would get rich very easily. Hammer patterns do not always work out, but it is something that we can look for as a potential change in the direction of the price of the asset that we're trading. Let's come over to another bullish pattern, which is the bullish engulfing. Essentially, the bullish candlestick engulfs the bearish candlestick, and you can see that really well here. So you have a down move and then a very strong up move. This represents a strong reversal in the price action. Will this continue or not? If it does continue, potentially that means the price will keep moving up. Let's see this move a little bit closer. What we can see here is a down move. It was a red session. The close was below the open, but you can see in the next session that down move didn't continue. Buyers came in and actually pushed the bullish candlestick way above the bearish candlestick. And this is a big move to the upside versus that small move to the downside that we saw. Can we see any bullish engulfings right here? Yes, you will see them all the time, and this is a good example. What we can see here is a down move. So we had this move, it was really a sell-off over a few sessions. So 1, 2, this is kind of a small relief, and then we have another 2 sessions to the downside right here. But what you can see after that is that obviously a seller or sellers came into the market over a few sessions and pushed it down. Those sellers dried up, obviously, because during this session, buyers could not get any cheap Bitcoin in this case. And so what happened is that during this session, a huge bullish engulfing occurred. The start of the session is right here, and that bullish engulfing and the price to the upside just moved way, way above this pattern. It absolutely engulfed this. This is known as a bullish move because it essentially signals to traders that buyers are having to pay up for the asset that they're trading, and that sellers are possibly no longer in the market. And you can see what happened here if you would have traded this is, again, we did have this move to the upside right here over a few sessions. Like I said with the hammer pattern, it doesn't work out every single time, but this is the best that we have in terms of the data that we can use to predict some of the near-term trading into the future. Let's move on to bearish patterns though, because of course we can use these as well. Something like a shooting star is essentially the complete opposite of a hammer pattern. We can see that buyers drove the price up during the session, but actually the session finished lower, and we can definitely see that. So let's go through the open, close, high and low. Yes, this is the open, of course. Because the candlestick is red, we know that the higher line is the open, and then of course the close is right here below that because it's a red candlestick. But look at the high. What that's telling us is that buyers came in, and you can see the previous 2 candlesticks up, and then during this session, those buyers came in. But during this session, sellers came in and pushed the price all the way down and actually finished almost near the low for the session. This tells us that there are more sellers in the market right now than buyers, and so those sellers are having to take lower prices. Let's go back to the chart and see if we can see a shooting star pattern. And I can actually see one, pretty much the most recent candlestick is what you would call a shooting star. So you can see a huge move to the downside right here, and a couple of sessions, buyers have come in and pushed the price up. But we can definitely see that during this session, buyers have tried to push the price up. Sellers are coming in and pushing it lower again. So potentially we can see these 2 patterns to the downside, these 2 candlesticks to the downside, and then a potential up move that was thwarted by sellers. So potentially we could say this may actually continue in a down move, or at least potentially make it much harder for an up move in the trading. So we'll have to see how that one plays out, but you can see another shooting star of sorts right here. It's not a perfect shooting star because we have a big wick to the downside, but certainly buyers did try and push the price up. It didn't happen, and it did actually proceed to fall. On the real chart, you're never going to get the perfect candlesticks that we see looking at charts like this. But once you have more experience looking at them, you can become more adept at trying to predict the future. Let's move on though to a bearish engulfing. Exactly the opposite of a bullish engulfing. This is where the bearish candlestick, or the move to the downside, engulfs the bullish candlestick. Essentially, this represents a strong reversal in the price action to the downside, and so you may want to trade the market like that. We can see a lot of bullish engulfings, just like we saw bearish engulfings. We can see one right here, so a small move to the upside, then a huge move to the downside. You can see that actually there was a massive move to the downside, but buyers pushed it up. Kind of hard to trade on this when you get massive moves, but certainly bearish engulfings are many, just like bullish engulfings. How can we actually use all of these candlestick patterns and the knowledge that we get to actually trade though? Well, candlesticks cannot show you long-term trends. They're just showing you the trade that's happening over the time periods that you're looking at. But of course, when you put them all together, they will form a longer term chart that you can have a look at. But they're not going to tell you exactly what can happen in the future. We can look at them though to predict bullish and bearish trading over the shorter term. And of course, day traders will definitely rely on these because it's telling you exactly what traders are doing in the market as you're looking at it. To use candlesticks further, then you may want to add in some other patterns. At the very least, you may want to add a moving average, and this will actually give you much more data about how a price is moving. I'll show you the 50-day moving average right here, and we can use it in conjunction with a candlestick to give us much more information. What we can see about the 50-day moving average is that the candles or the price was above the 50-day moving average. This would tell traders that it's definitely a lot of bullishness in the market and bullish sentiment right now. But what we can also see is that the price has dipped below the 50-day moving average. Traders will use many other indicators like moving averages and momentum indicators to really give them an idea of the possible trends and momentum in the market. As an example, we can see that right here, this 50-day moving average actually turned into what is called a level of resistance. Resistance is a level or an area of value where traders actually find it hard to push the price higher, as you can see here. So you can see that on around 10 sessions right here, the price tested this level of resistance. The price was trying to push up, but it always failed to push up above this level. This is known as resistance in the price because the price cannot push above it. Conversely, we can see an area of support right here. I would say that around this level would be known as a support level because you can see that traders have tried to push the price below this level on a couple of occasions. The closing price of the session or the day has finished above it on multiple occasions, which would be known as a level of support. The price is supported at this level from going lower. So candlesticks give us a lot of information about trading, but they do have to be used with areas of value, support and resistance. And really candlesticks will be used as entry triggers. We can definitely see another area of resistance on the shorter timescale chart around here. As you can see, there is definitely some resistance up here along these 1, 2, 3, 4 candlesticks. The price not really being able to move above here as well. So what we're seeing right now is possibly a range bound market for Bitcoin against the US dollar. As a trader, you may want to look at some candlesticks and really place some bets in the market. Where would I want to possibly get into some trades? This is an area of value right here. We could ride a move up. There's an area of value if the price does get around here, potentially looking to either go down or move up to previous levels of support and resistance. I can use these areas though to support my trades. For example, we can see down here, there's definitely a line of support. And so if I was going long, this is where I would put my stop loss around this level because the price did come down here before and was pushed back up. That potentially gives me an area where I could put my stop loss. If I went long right here, this would be an area where the price has seen resistance, and so potentially putting your take profits around this level. For candlesticks though, as an entry trigger, we can see that there's some area of consolidation in this candlestick, which is actually good for traders to have a few areas of consolidation where you don't get huge moves, where you can enter your trades, put your stop loss and your take profit, and then see to ride out your trade either for a win or a loss. That is how traders will often use candlesticks though, to give them very good trading information and potentially predict future moves. If you need some really great charting software, do check the links to TradingView, and also if you want to sign up for Binance to start trading, I'll leave that link in the description as well. Do check out the other helpful video guides and tutorials in the description too. Do subscribe for daily helpful crypto content, and I'll see you in the next one.